India's most innovative turbine company just launched a heat pump that no one else in the world has built for tropical climates, and the stock snapped back 35% from multi-year lows in 3 weeks. Quarter 4 results are dropping on May 18th. Is the story intact? Let's break it down. Triveni Turbine builds industrial steam turbines up to 100 megawatts for sugar, paper, chemical, textile, and renewable energy sector. 70% of the market share in the sub 30 megawatt domestic segment. Virtually, there is no debt for the company, and the ROCE sits at about 50%. There are three triggers driving the growth of the company. Trigger 1 would be, as you can see, the quarter 3 results for financial year 2026. The revenue is at all-time high of 624 crore, up by 24% year on year, and the EBITDA is at record 154 crore, up by 16.9%. The export sales is up 54%, and the PAT dip was a one-time wage code charge. Strip that out, and underlying profit grew by about 13%. And the order book for the company sits at about 1,986 crore, up by 9%. The management guided quarter 4 to be a record quarter. Results are on May 18th. The live catalyst is in 2 days, that is on Monday. And trigger 2 would be the new product changing the game. India's first of CO₂ based high temperature heat pump built with IISc Bengaluru, 120 degrees Celsius heat delivery, 3x more efficient than conventional heating, one of the first globally to perform in tropical conditions. Over 100 inquiries in the pipeline. First execution order in hand for financial year 2027. Center of Excellence at IISc now operational, and R&D runway for the next decade is the setup for the company. Trigger 3 would be the global demand accelerating. ADNOC approved, BAPCO approved, and ENOC approved. Already existing in Middle East oil and gas. Africa integrated. The US subsidiary live in Houston. Export sales is up by 54% last quarter. The world is ordering present in about 80 plus countries with 16 gigawatts installed. However, there is certain risk involved. Export order booking was down by 26% in quarter 3 due to geopolitical delays. The US subsidiary is still loss making, but the management is however confident on the quarter 4 recovery. Now you look at the technical analysis. You look at the monthly chart. The multi-year rally to all-time highs at 830 in late 2024, and there is a sharp correction since then. Current month there is a strong green calendar, up by 6%, and the volume is about 9.61 million. And then you look at the weekly chart, 48% drawn from all-time high to 428 in March 2026. Most recent weekly candle is the largest green volume bar on the entire chart with a 5.14 million share. That is institutional accumulation, as you can see in this particular week. Now we look at the daily chart, the steady downtrend from you can see from September to March bottomed with a massive reversal candle in April, as you can see, consolidated between 555 or 580 for several weeks. Now it is breaking out to about the levels of 607. It closed at 607 on Friday. The RSI for this particular stock sits at 67.6. So there is strong momentum. It is not yet overheated. There is room to push. The support for the stocks it's around 550 to 570, 560 to 570. The consolidation base from the past few weeks, as you can see, pullback here is your entry. Below that is the 510 zone, the hard low, where we can see the April reversal candle. Resistance sits at around 630 to 640. The supply zone from the 2025 downtrend, and the strapped seller sitting right here. Stock is approaching the zone now. Above that, 720 to 740 is the next supply zone. As you can see, the downward reversal trend also starting from this in the previous weeks. And 830 is the all-time high. That is the ultimate target. And based on this logic, I'll be setting up my GTT. So I will be entering the stock at a trigger price of 565 because I'm waiting for a pullback to the support base. Stock at 607 right now. I'm not chasing the stock. So 565 would be my trigger entry, and I'll be setting up my stop loss and target price using OCO. So my stop loss would be at 510, that is below the April reversal base. Structure breaks here, exit is clean, and there is no second guessing. And the target price would be around of 720, just below the major supply zone. So 720 is the target price below the major supply zone as it was marked on the chart. And as my risk reward ratio would be about 1:2.8, that is ideal for swing trade. The plan will execute itself and no active emotions are involved. So we have to see how the stock will actually react. With 70% of market share and India's first CO2 heat pump at ADNOC approved, record quarter 4 is incoming. You have to see if it matches up with the management and the analyst expectations. Is it, my question for you, is it building the future of the industrial energy? Will the stock perform really well in quarter 4, and how will the market react to it? Please give your views in the comment section. Do your own research and trade safely. Thank you.